So we are revising Ind AS 36 impairment of assets. A very quick recap. Okay, a short recap. Let's revise. So Ind AS 36 impairment of assets. First of all, impairment means reduction in the value of the asset beyond depreciation. You remember? Okay. Is depreciation mandatory? Yes. But the impairment is not mandatory. It is based on indications. We always charge impairment after calculating depreciation. Okay. Now, on what assets impairment shall be done? On PPE, ROU asset, intangible asset, investment property, goodwill acquired, investment in subsidiaries or associates or joint venture if measured at cost. Okay, we'll discuss this portion separately, don't worry. Identification of assets that may be impaired. Now, there are 3 assets which shall be tested for impairment every year, irrespective of their indication. Whether indications will be there or not, you have to test them for impairment. Have to test them means compare carrying amount and recoverable amount every year for these assets. What are the assets? Intangible asset with indefinite life. Next, intangible asset not yet available for use. Not yet available for use. And the last one is goodwill. These will be tested for impairment annually. What about other assets? They will be tested only when there is an indication. Now, the main question, how to calculate impairment loss? See, I said impairment is a loss, not expense. Depreciation is expense, but impairment is a loss. Why loss? Because you can't recover that much value from the asset now onwards. Understood or not? That much value means that the value you are reducing, you are not able to recover now. So, what is the formula? Carrying amount minus recoverable amount of the asset. So, first of all, what is carrying amount? Which is book value. We always calculate carrying amount after charging till date depreciation. Okay. And what about recoverable amount? It is a higher of? Correct. Fair value less cost to sale or value in use. When you are calculating fair value less cost to sale, it means you want to sell the asset. By selling the asset, how much you will realize? And when you are calculating value in use, what is the intention? By using the asset, how much you will derive? Understood or not? So first, let us understand the fair value less cost to sell. What is fair value? It is simply a market value. Simply if you would sell your asset, how much market value will you get after deducting cost to sale? What is cost to sale? Okay, tell me. Legal cost, stamp duty, brokerage, commission, dismantling cost for sale, removal cost to complete the sale. So any cost which is necessary to bring the asset into saleable condition, that you have to consider as cost to sale. But these are the 2 costs which are not necessary to bring the asset for saleable condition. One is termination cost, employees, valuation fees. These are not necessary to bring the asset into saleable condition. Now, let us talk about value in use. What is value in use? Present value of future estimated cash flows, which are to be derived from use of the asset. So, what are the cash flows we can expect from the use of the asset? That is called the value in use if we make the present value with the discounting factor. Which discounting rate should be used? Pre-tax. And here also we have 2 options, either weighted average cost of capital or incremental borrowing rate. Okay. What are the cash flows we don't consider while calculating the present value? Collection from the existing debtors, not the future debtors, existing debtors. Next, payment to the existing creditors. Next, tax payments and refunds we won't consider. And proposed business acquisitions or proposed investment not yet done, from which you are expecting some cash flow, that is not fine. You will not consider in the value in use. Now, let us discuss about foreign currency cash flows. So, foreign currency cash flows, if you have cash flows in foreign currency, not an issue. Step number 1, first of all, make the discounting. Okay. Make the present value of those cash flows. Which discounting factor you will take? Foreign country rate. So, step number 1, discounting of those foreign currency cash flows. And then, once it is discounting, now you have discounted cash flow in foreign currency only, the single value. 1, 2, 3, 4, 5. These are foreign currency cash flows. Now you are discounting them. Understood? Now you have the present value, single value. Still it is in dollar. What will you do? Translate into spot rate. Spot rate means today's rate at which you are valuing the value in use, measuring the value in use. Guys, are you understanding? So it is your foreign currency cash flows. Okay, one important thing we understood, that if you can't identify fair value less cost to sale, it's fine. You can treat recoverable amount as, it's not an issue. But if you can't identify value in use, you cannot treat recoverable amount is equal to fair value less cost to sale. You can't treat it like that. Hence, what you will do, entire CGU shall be tested for impairment. You will assume that if you can't identify value in use, that means your asset, your individual asset cannot generate individual cash flows, or cash flows independently they cannot generate. So you will consider entire CGU. Now coming to the CGU part. So what is CGU? It is the smallest group of asset that generates independent cash flows together. Understood or not? So a factory can be a CGU and all. Okay. Now CGU comprise of so many assets and one liability. What? Carrying amount of PP, ROU. It comprise of intangibles. It comprise of current asset also. Although current asset will not be impaired, but only current asset will be considered. Okay. Next, allocated goodwill. Next, corporate assets. Next, if there is any directly attributable liability related to the CGU, that will be considered, like provision for dismantling cost. So all these will be part of the CGU. Now we have the carrying amount of the CGU. Total we have the carrying amount of the CGU. Now we included the goodwill and corporate asset. So what is corporate asset, guys? Any asset such as head office which is not capable of generating cash flows independently but support the CGU to generate cash flows, like head office buildings and all. They support CGUs. They directly cannot generate the cash flows. Okay. So, okay. Now, what about goodwill? Why we are including the goodwill in the CGU? Because again, goodwill, just like corporate asset, goodwill is not able to generate independently cash flows. Understood or not? So, you have to consider, you have to allocate the goodwill into CGU. But first of all, the question is how to calculate the goodwill. First of all, we have the purchase concept. Then add. NCI can be calculated with two methods. One, fair value method, or proportion of net asset method. You can calculate by either of the two methods. Then minus 100% net assets acquired. See, goodwill we are calculating means we have acquired the business. So if we are acquiring business, we must have acquired the, guys, reply, net asset. We must have acquired the net assets. So here it is goodwill. You will get the goodwill either full goodwill when the NCI is calculated at fair value, partial goodwill when. Okay. Now, if the goodwill cannot generate independent, or corporate asset cannot generate independent cash flows, they cannot be tested for impairment individually. If not, basically they cannot generate independent cash flows. Hence, we are not impairing them individually. We will always allocate them to the CGUs, even multiple CGUs. Array? Okay. Now, how to allocate? How to allocate the goodwill and corporate asset to the multiple CGUs? Let us first discuss about goodwill. What is the first priority? In the ratio of the given in the question. Goodwill, for goodwill allocation, they will give you the ratio. Second priority, if they are not giving you the ratio, what will you do? Fair values of CGU they will give you. Okay. And if they are not giving the fair values, then default carrying amount of CGUs. What about the corporate assets? In the ratio given in the question. If they are not giving you the ratio, multiply by life. Or otherwise, if the life is also not given, then only carrying amount. Allocate them to the CGUs. Guys, understood or not? Now, what to do when there is an unallocable goodwill or corporate asset, like we can't allocate them. We can't allocate them. So what to do? If the goodwill and corporate asset we can't allocate, then we will follow which approach? We'll understand top-down approach separately. Don't worry. We'll discuss top-down approach. Okay. Now, what about full goodwill and partial goodwill? What about full goodwill and partial goodwill? When we calculate full goodwill, when the NCI is calculated as per fair value method. And what is the meaning of the full goodwill? Meaning of the full goodwill is this goodwill belongs to both holding company and share of NCI also. But what do you mean by partial goodwill? Partial goodwill when you calculate the NCI as proportion of net asset only. So partial goodwill belongs to holding company only. Guys, are you understanding my point? Okay. If impairment loss of other CGU assets of subsidiary, sorry. Yes. Now, when you have goodwill, full goodwill impairment loss, the impairment loss you allocate to, but if you are recognizing the partial goodwill impairment loss on partial goodwill, you recognize such loss for the holding company only. What about the other CGU assets of subsidiary company? If you recognizing the impairment loss on other assets of the subsidiary company, you recognize the impairment loss for holding and NCI. You will share such impairment loss to holding and NCI. Guys, are you understanding? One thing is very clear. If you are impairing goodwill along with CGUs, definitely you are doing this in which financial statement? Consolidated financial statement only. Understood or not? So in consolidated financial statement, you will write off the assets and book the loss. Such loss shall be shared between holding and NCI for those other assets. Guys, are you understanding my point? Okay. Now let us talk about top-down approach. Once again, when the top-down approach will be followed? When the goodwill or corporate asset are unallocable. So what to do when we follow the top-down approach? First of all, ignore top-down approach, ignore unallocable goodwill, ignore unallocable corporate asset, impair all other CGUs. Impair all other assets or all the CGUs properly in a way just like we used to impair. Carrying amount of CGUs without such unallocable goodwill minus recoverable amount of CGUs without any goodwill. Understood or not? We'll get the impairment loss. Allocate such impairment loss in the assets and holding an NCI. Guys, understood or not? Now, there is a goodwill unallocable or corporate asset unallocable. So, top-down approach means look from entire entity point of view. Consider entire entity as a CGU. Are you guys understanding my point? Consider entire entity as a CGU. So, once your individual CGUs are impaired, now start the top-down approach by looking the entire entity, considering entire entity as a CGU. That is called top-down approach. Okay, so in top-down approach, you first take revised carrying amount of, I should say, all CGUs. You first take revised carrying amount of all CGUs after the impairment. Okay, next you revise carrying amount of allocable goodwill and allocable corporate asset after impairment. If such goodwill or corporate asset was allocable, it must have been impaired along with the CGUs. And then add these two things. What? Unallocable unallocable corporate asset and unallocable goodwill. So you get the entity as a whole, carrying amount and recoverable amount. This recoverable amount will be given in the question, don't worry. So again you will get the additional impairment loss. What? Such additional impairment loss shall first be allocated to the unallocable goodwill and then remaining to the unallocable corporate asset, if any. Guys, understood or not? Okay. Now when you finally write off the CGU or calculate the impairment loss of a CGU, what is your step or what is your sequence of writing off the asset? First of all, out of the total impairment loss of CGU, first always you will write off goodwill. Once you are writing off the goodwill, okay, the remaining impairment loss will be used to write off which asset? Which asset? Any asset that is a part of the CGU, although part of the CGU, but can generate independent cash flows individually. Understood or not? You allocate the impairment loss to that asset by which formula? Lower of individual impairment loss. Individual impairment loss means that assets individual impairment testing. Okay, or proportion of the combined impairment loss in the ratio of carrying amount. We can refer these questions for this. Understood or not? Okay. What about the balance impairment loss once the goodwill and that asset is written off? The balance impairment loss shall be allocated to the all other assets in their respective carrying amount ratios. Okay, understood? So, if there's a partial goodwill, if you are impairing the partial goodwill, what to do? If you have a partial goodwill, you included that partial goodwill in the CGU. Now CGU includes partial goodwill, but Ind AS 36 always assumes that recoverable amount is always with the full goodwill. So the base is not same. What will you do? in that carrying amount where you have already included partial goodwill, what will you add? You will add the unrecognized portion of goodwill belonging to NCI. So you will add that, you calculate partial goodwill divided by holding share because it belongs to holding only, multiply by NCI share. You add the unrecognized goodwill portion to the carrying amount of CGUs where you already have added the partial goodwill. Now you get the total carrying amount of the CGU, total recoverable amount of the CGU, it is already given in the question. So you now have the impairment loss covering full goodwill and follow the same steps like we used to do. Understood or not? Okay. When you recognize the goodwill impairment loss, make sure that you are not recording the impairment loss for unrecognized goodwill. Understood? Okay. So journal entry, when you record the goodwill impairment loss along with the CGUs, entry will be impairment loss account debit to goodwill to CGU asset. Understood? Now impairment loss to goodwill to CGU asset, if it is a partial goodwill, that goodwill belongs to holding part. Now impairment loss shall be allocated between NCI and holding. So holdings part will be transferred to and NCI part will be debited to NCI. In holdings part, what you have transferred? The partial goodwill and holding share in the CGU. What about NCI? You have recorded the impairment loss of CGU share of NCI. Understood or not? Okay. Last, reversal of impairment loss. Reversal of impairment loss. Earlier you have made the impairment. Guys, earlier you made the impairment. Now after some years you are getting indications, positive indications that the recoverable value is now higher, is getting increased, that your impairment is waste. Now you should reverse the impairment. So how you should reverse the impairment? It is not recoverable minus carrying always. You have to apply 5 steps. What are the 5 steps? Number 1, you want current carrying amount of the asset on the date of reversal. Next, recoverable amount will be given in the question. Okay, third is very, very important. Correct. Carrying amount of asset had there been no impairment earlier. So you will calculate this carrying amount considering that suppose in earlier, if you don't impair that asset, if you wouldn't have impaired that asset, what should be the carrying amount today? Now, reversal means, can I say increasing the value of the asset? So you are increasing the current carrying amount. You suppose your current carrying amount is 1000. You are increasing the current carrying amount from 1000 to either or this carrying amount had there been no impairment, whichever is lower. So here it is 1500, here it is 1400. So what will you do? So you will increase this 1000 to 1400, whichever is lower. So 400 becomes a reversal. Guys, are you understanding? So revised carrying amount should be 1400 and the step 5 reversal should be 400. Guys, understood? Okay. So impairment loss of reversal of impairment loss of CGU. When you are reversing the impairment loss of CGU, except goodwill, you can reverse. Is it right now? Can we reverse the goodwill? No. Except goodwill, you can reverse the impairment loss of other assets, and such impairment loss shall be, such reversal shall be allocated to the carrying amount of all CGU assets. Guys, understood? So hi everyone, this was the revision of Ind AS 36. I hope you liked this video. If yes, please do comment your feedback. I actually require it because this video was taken from my face-to-face as well as live batch of CA Final FR English mode in Guntur. Very soon I am going to announce this batch for the online mode also. Yes, one more thing, which Ind AS you want me to revise next, please do comment. I will definitely post another revision on the video. Also, the notes you have seen in the video, the handwritten notes, you can download it from the description. I have given the link to download from the description or the pinned comment. Please like this video and share with your friends. Thank you so much.